All right. So, gentlemen, thank you so much for joining me here on stage. And we are just going to chill out and just have a very easygoing conversation regarding whether or not you think they're going to hedge the system. So, yeah, what are your thoughts on this?
Hi, everybody. My name is Dorjee. I'm the CEO of Perlin.net. Just as background, Perlin, what we're doing is your mobile phone, your laptop, your PlayStation has, when, for example, you're sleeping, compute cycles that you can rent out. So we're creating a decentralized AWS. So far, we've raised $49 million in our private sale. We were led by FBG, Bitmain, a whole bunch. We've got 180 strategic investors, Block Tower, Arrington, 500 startups, Global, Brain, Gobi, VC, a whole bunch of those guys. And we can, happy to talk if you guys have questions about everything. So I've advised 12 different ICOs. I've led 3 ICOs. And also we've started a hedge fund which does ARB in Bitcoin, and then also angel invested in about 30 ICOs. So just coming back, like, in my opinion, what Perlin is doing now is we have 4 revenue streams. Put your hands up here if you stake, or if you have a validator node or a master node. Does anyone in the audience know what I'm talking about with that? Put your hand up. I see 1 hand, 2 hands here. Okay, so if you haven't staked, you should get into it. Basically, all it means is you transfer wealth from people who hold tokens to people who are staking, right? So if you look at EOS, arguably delegated proof of stake, only 21 block producers. It's been shown that there are certain aspects of collusion. So, what we're trying to do is make it a much more egalitarian, accessible staking process. We have 4 income streams which come back through Perlin to stakers, people who run validator nodes for Perlin. 1 is a percentage of financial transactions. 2 is a percentage of fees on the smart contract layer. 3, what we do, which is the compute layer. So for example, if you've got people with mobile phones in, say, India or Indonesia, then people can rent out their compute, and say an oil company that's, for example, using big data to compute some of their fines, they can purchase that. On top of that, we're charging 10%, which will go back to the validator nodes. That's significant because it's the first USD stablecoin based payout for staking. And then the 4th one is we do an inflationary mint, similar to an EOS or a Tezos. But the point that I'm making is, coming back to your question, we believe that hedging is possible when you have staking, and that hedging is also possible if you have stablecoin denominated payout. So that's my brief sort of overview, but we can dive into it. Naeem?
Thank you. So I run the column at Forbes, covering blockchain and price action. My background comes from institutional banking. I worked for Bank of New York Mellon and Bank of America in equity and hedge fund trading. It's a bit of a different environment, but over the last few years, I have been involved in the blockchain space. And interestingly, now I will be starting a PhD in the same subject. So covering blockchain and the other macro areas within that. I think over this year, there has been so many different changes, and then I'd love to bring both guys into it to see that where exactly the market is perceiving the blockchain industry. And I'm talking about the actual, your traditional equity market or the traditional market, and then where the blockchain is sitting right now. And then why it is necessary for academia, especially, to get involved in, and then have some sort of a research which can be implemented further.
Hi, my name is Daniel Santos. I am CEO of Token Advisors. We started a company in Singapore 2 years ago. Before that, I worked in investment banking in London for many years. I worked at Deutsche, Citigroup. I also worked at Renaissance Capital in Moscow. And currently, my company, what we do is that we help small, medium-sized companies to raise money using security tokens. And the current securities regulation in Singapore and in the US, where most of our clients are from, we do it under the Jobs Act, Reg D, and Reg A Plus from Q1 next year, which will allow the market to take off. So we allow investors to tap into pre-IPO growth of companies using securities tokens as the first liquidity event. And the second liquidity event is the IPO, so we help companies on the whole journey from pre-IPO fundraising using security tokens to IPOs. We have offices in Singapore, Chicago, San Francisco, and Toronto. And regards to the main question, are they hedging against the existing system? Well, I think that is a multi-layered question, but what I see is the following. In one layer is a government such as Brazil, Russia, China buying more gold to hedge against the fact that they want to stop the currencies being attacked by the US. So they're putting a lot of money on gold, and I think fiat currencies are under threat long term due to huge debt, etc. And the future is with cryptocurrencies, and the future is with tokenized assets and tokenized capital markets that allow investors to access illiquid assets where they were previously liquid and now they're liquid, and to access the growth of new technologies via security tokens, via the pre-IPO growth of the companies.
All right, cool. Thank you very much, gentlemen. Now, I have a few questions here. Obviously, we have a lot of rising blockchain companies, and they're doing a lot of great things. But do you think, the financial industries that are currently in place right now, do they view these rising blockchain companies as a threat? And are they a threat? Now, feel free to jump in and just share your thoughts. Go ahead.
So I can start on it. So we did an article, I don't know how many of you read it, that the actual companies like Walmart, Amazon, and several other companies which are actually using blockchain, or they have a patent saved or marked for them. So as we were discussing earlier, during the Q1 of 2018, when we were looking at earnings and the results and everything, anything which had a blockchain written on it, it was like, yeah, okay, the future is really bright, and then these companies are jumping into blockchain. And it was like, I don't want it to just go on about it and then make the comparison with the internet, but because that all of you already know. But this is what really happened this particular year. Again, just the history repeating itself, that the corporates using the blockchain during their earnings report for Q1 and Q2. The word blockchain literally vanished when we came to Q3. Because in a Q3, we don't see that word emerging once again. It's like, yeah, okay, now the companies have started to, all of a sudden, they have just change of heart, and then they don't want it to go into a blockchain space. I think that is a concern. About what Daniel said, I agree with the security aspect completely. I think worked in the industry, we can see that how the settlement process could take ages. And yes, STOs would improve that industry for sure. And then blockchain itself would definitely change it. But whether the cryptocurrencies would exist in current form, respectfully, I would disagree on it. Because I think there is so much fuss and so much fad about it. And then the most important thing is, the most annoying thing, that each and every single cryptocurrency is supposed to have a limited amount of coins. But what the heck we are talking about when every single coin, BTC, and then you come coming up with their own kind of a folks. So you question that. Let me just bring a little bit back. How many of you actually know the definition of money? So the traditional definition for money, you have 3 different money supply: M0, M1, M2, and M3. M0 is issued by your central bank, M1 is bought by the banks, and then they are gone into. When we're talking about Bitcoin, we have B0 and B1. B0 is the actual one, and then you have a B1 buying the B0. The question is that yes, the government isn't issuing the legal tender that they would accept B0 or B1, just like M0 and M1, they've been accepted by the government because the tender is issued by the government. So for this particular reason, I think as long as we are talking about the cryptocurrencies, because there's no legal tender behind it, I don't know. I mean, I'm not too sure. Having said that, I have invested in Bitcoin. I have money invested in Ethereum as well. Why? Because I am happy to lose that money because the upside is unlimited for that.
I got a couple of points in terms of, so Perlin, for example, we've signed a deal with Telkomsel, which is the Indonesian telco provider, and we've signed a deal with the Indian government. Why? It's because what central banks have neglected, because the value of those users is quite low, the centralized systems can't pick up the bill because they have to, with the KYC, AML, all of the different costs involved. So we think decentralized algorithms and platforms are going to be able to scale in trustless environments, especially for poor people. So Perlin's goal is to have $100, $200 being able to be earned by people using their mobile phone. In that process, they'll also create a Perlin wallet. They'll probably have some type of exchange platform that they can do trading with. They'll get access to remittances at a lower cost than Western Union's 10 to 20%. They'll also get access, hopefully, to debt at a lower price than, Grameen banks, microfinancing at 30% a year. And on top of that, coming back to, what these guys do, hopefully they'll also get access to synthetic, divisible bits of Facebook share. So, in Indonesia, second biggest user of Facebook, but they have zero ownership of Facebook. Maybe an Indonesian farmer can buy a tokenized part of a Facebook share, which is held in custodial care or some other synthetic that gets created. And that's where hopefully we're going to be plugging in people that are neglected into the system. So I don't see there as a threat in that regard, but I definitely think at a bigger level, as Naeem was mentioning, there is a threat.
What do you think, Daniel?
Yeah, so going back to what I mentioned about cryptocurrencies being the future, what I meant was, in a sense, in the context that, in my humble opinion, governments, they will bring their currencies, the legal tenders, onto blockchain or blockchain-inspired platforms where you're going to have a digital version of that currency. And regards to what these guys are saying about fractional shares on Facebook, etc. Yeah, so I think that's true, but I think the biggest impact of a blockchain and blockchain-inspired technologies is actually allowing small and medium-sized businesses to have access to funding. And I think that's the most transformative aspect of blockchain and blockchain-inspired techs and the token economy. Because governments, the ones that are successful, the countries that are thriving, are the ones that have a big percentage of small and medium-sized companies as parts of their economy. So allowing small, medium-sized business to have access to funding, it is of paramount importance in terms of allowing developing countries to thrive and become developed, and to allow entrepreneurs to have access to funding so they can create the next Amazons and the next Facebooks. So that's why at Token Advisors we're focusing on allowing individuals, small, medium-sized companies to tap into funding where they will not have funding otherwise, as well as allowing small, medium-sized companies that are looking for funding not to get exploited by VCs and PE firms, where they don't necessarily have to, by using the token economy, they don't necessarily have to dilute their equity, or even if they do, it's not going to be at a disadvantageous terms that they would otherwise get via VC or PE route. So it's more democratic, and it's more friendly towards small, medium-sized businesses. And that is what the token economy is all about.
All right, cool. Thank you very much, Daniel. Now, we are running out of time, so just one final question, and I want 1 point from each of you, okay? What is the role played by big institutions and corporations for the adoption of cryptocurrencies? So what is their role? In 1 point, what would you each say?
So often there is proactive and passive roles. In this case, I think it's more of a passive role. I just think the risk involved for a big institution to participate in something that's not regulated is too hard. And when you look at, say, the fact is, Airbnb is illegal today, Uber is illegal in most cities, but they're still growing fine. It's just about, trying to minimize the antagonism from big institutions. My recommendation would be make it stay passive, allow for proliferation of new ideas. I mean, we've engaged AWS and Google Cloud in conversations, but we still think Perlin can grab up to 10% of the cloud market because people want a decentralized solution. So yeah, just don't sue us, don't do anything illegal, and don't be assholes, and we'll take your margins. All good.
All right,
Jeff
cool.
Bezos, not another $100 billion.
Nice. Naeem, what do you think?
Thank you. I think, look, I'm gonna answer it in a different way. How many of you remember actually when the IPO happened for Facebook? Do you remember they were actually blaming Morgan Stanley for that? Because the valuation was too high? And look at the price where it went after. So right now, we are looking at a market, thanks to BTC and Bitcoin Cash, all of these. Some of them, I'm going to call them idiot because of the folks. I really do not like it. It goes against the idea of limited supply. So right now we have too much of a pessimism, and having nearly about 7 years of experience within the industry, whenever there is a pessimism, no one wants to buy it. But now it is actually the time to buy and to look into these good projects. I agree, if these guys can pull it off, I think Perlin has a really great concept, for sure. And the collaboration or what they are trying to do with AWS is again pretty good. Overall, a good projects, there are only two ways to survive in this. Either you work with the bigger corporations, or either you make them to acquire you. And I've said this a few times before.
All right, thank you, Naeem. Daniel.
Yeah, so I'm not sure if you remember the question, but...
what role do big institutions play?
Okay, so I think regulation is a key thing that needs to become clearer, and for governments to work together with the players to arrive at the right regulation that allows big corporations to get more involved, and for also institutional investors to actually tap into the markets. And I think blockchain entrepreneurs or entrepreneurs in this space, they need not to work against the system necessarily, but to work with the system and work with big corporations, because they need to work with the banks and not against. And so more cooperation, collaboration, and embracing the regulations so that big corporates can actually get more involved.
All right, thank you very much, gentlemen. Can we give our panelists a big round of applause, please? Thank you very much. Thank you.